Wild swings on Dalal Street as Sensex and Nifty go on a roller coaster ride. A late recovery helped to recoup most of the losses, but all sectoral indices end in the red. Market capitalization of companies listed on BSE drops below 5 lakh crore rupees for the first time in 9 months.
Rupee sinks to a record low after posting the biggest single-day fall in 3 months. Sustained foreign selling of Indian equities and weak market sentiment take the rupee closer to the 92 rupee mark against the dollar.
SRF slips as pricing pressure from Chinese rivals weighs. United Spirits dips as volumes miss the mark. Shoppers Stop is hit by weak consumption, while Vikram Solar sees orders and revenue slip sequentially. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Sonal Bhutra. With me is my colleague Vivek Iyer. Vivek, good afternoon. It was a choppy session. At around 12:30, we saw that massive recovery, almost 350 points from the lows of the day on the Nifty, but then that got sold into as well. Nifty finally ended below the 25,200 mark. We breached the 25,000 mark as well in trade today. Mid caps underperformed. That index was down 1.14%. In the Nifty pack, 30 stocks ended in the green as we speak, and the advanced decline ratio that was in favor of declines, but at a point in time, the ratio was 1:5, 5 in favor of the declines as well. So it's been quite choppy. Look at the advanced decline lines. They actually merged at every point and finally it ended in favor of declines. But it's been very interesting, the session today with wild moves across the board.
That's right. Good afternoon, Sonal. A very, very choppy session. The only thing that went up consistently was the India VIX. And in fact, like you mentioned, the intraday volatility actually extended even to a whole host of stocks, especially those companies that came out with a set of results. Towards the end of the trading session, we saw a name like Dalmia Bharat from the cement pack deliver a good set of numbers with strong volume growth. That did quite well. But overall, most of the results, especially where there was a slight miss, saw significant selling pressure. Names like Persistent, some of the names like United Spirits, all of these stocks saw significant selling pressure. Well, here's the lineup of what we have in store for you today on Markets Forward. We'll start with the top movers and shakers of the day with Hormas. We break down the reasons behind the rupee's record low levels, analyze key Q3 earnings, and explain why Kalyan Jewellers has been in a free fall for the last 9 sessions. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. So first up, Hormas joins in from the wall for the top movers and shakers of the day.
You know, not for the faint-hearted. Please don't try this at home. You could use any form of disclaimer for today's trading session, considering the kind of moves that you had. But the recovery on the index today was led by Reliance Industries. And after a prolonged period of underperformance over the last 7 to 8 sessions, the stock ended 1% higher and was the chief contributor in that recovery from those panic low levels of 24,919. TCS was the other contributor along with Ultratech Cement. Both of these stocks ending with gains of around 0.5% to 1.5% as well. So some green seen on some of the index heavyweights in today's session. Earnings were a mixed bag. The good ones were rewarded. Credit Access Grameen's good results came in with a slew of upgrades. The result was a 10.5% up move even in a weak market, even when the markets were choppy. That stock consistently remained higher and ended higher as well. India Mart was one such name as well, 6% higher on the stock. SRF, after some disappointing management commentary, fell 7%. And Tata Communications and margins narrowing on a year-on-year basis, that stock too ended with losses of around 5.5%. The sector that did well today was the metal names, goes without a surprise. Hindustan Copper, Hindustan Zinc, again the principal contributors to that gain. Hindalco and JSW Steel also chipping in with their part in this metals rally in today's session. In some of the newsmakers today, Kalyan Jewellers stands tall on that list. Tall on the list of newsmakers, of course, 12% lower on the stock. UPL was down around 7% yesterday, another 4% gone in today's session. And of course, the two deal-making names, Bazaar Style Retail and Cupid, both of them seeing losses of anywhere between 7 to 9% in today's session. And lastly, stocks that ended at a 52-week low in today's session. It's a long list, and MobiKwik, at one point, the post-listing high of the stock was 700 rupees. It's now down to 200. Anup Engineering was down 6, Orient Pro down 6, and Tata Chemicals too seeing some selling pressure today, 5% lower, ending at a 52-week low for this stock as well.
Some interesting names on your list, Hormuz. Thank you so much for joining in. We'll discuss some of them in greater detail as well. But the other big story has to be the Indian rupee touching a new low of 91.73 per dollar. And that continued to be the case. It did recover. But let's talk about the fall. It has been driven by sustained foreign selling of Indian equities and weak market sentiment. Dealers also say the RBI has been intermittently supplying dollars. Lata Venkatesh is joining us with more details on this one. Lata.
Well, the story is familiar. Foreign funds are selling Indian shares, buying dollars with that money and repatriating it. And that's the same thing. The rupee was already on that weak wicket where capital flows are not able to bridge the current account deficit. But what has exacerbated it is this kind of risk-off in the last 24 hours across all financial markets. That hurts an already bearish asset even more. We did see the Reserve Bank supplying dollars, but when there is a cascading buying of dollars by foreign funds who are marching out, the Reserve Bank wants to preserve the ammunition, so they weren't supplying in huge amounts. Another factor is that month ago contracts entered into the NDF market is maturing, and that leaves a lot of Indian banks in short dollar positions. That creates pressure around 1 p.m. when you have the fixing of the dollar rupee rate for the day. That added to the pressure. So we saw the rupee at its weakest around 1 p.m. There is little to redeem the pressure on the currency. We can only say that at the moment, the rupee fall also has strengths. We mustn't look at it as a matter of despair because it makes imports expensive and therefore protects domestic industry from cheap Chinese imports fundamentally. Because while we have fallen in the last year or so, about 5.5% versus the dollar, versus the renminbi, the Indian rupee has fallen nearly 12% in the last 8 months or so, or in the past year. Therefore, this has its positive payoffs from the import scenario. Exports also become more attractive, but that, of course, are usually annually renegotiated contracts. Short point, when there is a sudden sharp fall, all these positives kind of pale into insignificance because even those who want to bring dollars don't bring in. Exporters stay back. They want to sell later. Importers rush to cover. And foreign investors also wait to see how much the currency falls. Why would they want to bring in something when the asset is depreciating? So sudden sharp falls don't help anyone. But in the long run, the answer to all the instability or differences in prices is a falling rupee. It's also a solution, but not when it is a sudden sharp fall.
Well, thank you so much, Lata, for joining us and giving us all of the reasons behind the rupee's sudden slide today. But it's a good time to welcome our guests. Today, we are joined by Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, and Shrikant Chauhan from Kotak Securities. Thank you so much, gentlemen, for joining us. Well, Shrikant, let me come across to you first. We saw a sharp intraday dip in the Nifty. We've slipped below the 25,000 mark. Where do you see the markets headed from the current levels?
Yeah, afternoon, Vivek and Sonal. So yes, Nifty has fallen, and importantly, it has broken the level of 25,000, which is something we can say weak for the market. But at the same time, if we consider the overall technical pattern of the day and the way there is volatility, I am of the view that there is still indecision, and at higher levels, we are going to see furthermore selling or maybe profit taking. So we need to be careful at higher levels. I think the market has shifted its range. We were of the view that 25,500 is going to act as major support for the market, but since last 2 days, the market is comfortably trading below the same, and it has broken the important level of 25. So maybe the market is going to spend some more time within the range of 25,500 and 24,900. But if there is a long-term view, then I think the market has corrected to its important level. And here, if there is a medium to long-term view, then certainly we should look for taking some contra bets of going long at important support levels like 25,000 or maybe 24,900.
Take that point, Shrikant. Sudeep, comment on this. There have been a lot of factors which fundamentally are also impacting markets. Do you think we could continue to see this on the back of those fundamentals, be it earnings, be it what's happening with tariffs?
Obviously, the situation is not very good. There are a lot of headwinds, and the market is navigating that. The global news flow is definitely very, very keenly watched, and it's not at all good at this stage. Corporate results have been by and large okay. I think even the IT numbers, you can say mildly positive compared to the expectations. So I'm not too pessimistic. I mean, what is happening all around us is definitely a matter of big concern. And this massive correction which we have seen over the last few days, I think it's a great opportunity for a long-term investor to start picking up good quality shares. Look, I mean, probably this will continue for some more time, but it is definitely a time for picking up good quality shares from a long-term perspective. There is no two ways about it. Fundamentals, by and large, remain okay. Yes, the raw material prices have gone up in some cases, and the margin may come under pressure in Q4 for some of the companies using metals. But other than that, I think domestic companies should continue to perform well. We, of course, will wait for some announcements which can, probably help the market and the economy. Let's wait and watch for that.
Well, absolutely right. Sudeep, well, one particular stock that did quite well today was Credit Access Grameen. That stock surged nearly 13% in the session after a strong Q3 where there was a turnaround with brokerages such as CLSA, HSBC and JM Financial upgrading the stock. Gaurav joins in with a report card of Q3 as far as credit access is concerned.
Well, yes, if you look at Nifty and overall the market, it was actually a difficult day. But one stock which actually stood strong was Credit Access, and this was on the back of the numbers. And the reason being that if you look at the net interest margins, we saw 60 basis point of increase on a sequential basis. And at the same time, second and the biggest point which market took in a very positive way is the credit cost. Now that has declined almost by 300 basis point on a sequential basis from 8.5% to around 5.5% levels. Now, what are the reasons? First is that if you look at the MFI portfolio, they are seeing the stress is actually falling down. In fact, the collection efficiency, that is actually improving. At the same time, management remained confident. They said that credit cost is going to be in the range of 4 to 4.5% next year, which means there is a room for further decline in credit cost going ahead, although in fourth quarter it may remain stable. Other than that, the ROAs, they are expecting ROAs also to increase to around 4 to 4.5% levels. Again, there is a room for development because currently the ROA stands at 3.5%. They are also confident on the growth guidance. They have reiterated their growth guidance of 20% for FY27 versus what they reported as 8.5% in this quarter. So definitely, all in all, a very good set of number. Management remained confident, and after that we saw brokerages also showing some kind of confidence. We saw HSBC and CLSA actually upgrading their target price as well as a rating for the stock to buy. And let's also not forget about the valuation aspect, because if you look at valuation for Credit Access Grameen, although it trades at 2 times price to book value, but it is still lower than their peak valuation of 3 times that we have seen in December 2023. Let's also not forget about some of the stocks which will be in focus on the back of the MFI recovery that we have seen in Credit Access Grameen. And these will be in the likes of 5 Stars, Spandana Spurti and even Bandhan Bank, because they have not reported numbers yet. But given that Credit Access Grameen has shown some kind of improvement in the asset quality, we may see some uptick in these companies as well. But all in all, in terms of good numbers, we saw Credit Access Grameen gaining in trade today.
Okay, yes, some of these stocks which bucked the trend, so those are on our radar. Kalyan Jewellers was the other stock which slipped nearly 15% in trade on heavy volumes. Remember, Motilal Oswal Mid-Cap Fund holds nearly 9% stake in the company, while the promoter pledge remains nearly 25%. Let's get in Mangalam to tell us what really happened. There have been some management changes as well at the fund holding stake. Mangalam, tell us more.
That's right. Kalyan Jewellers is down in double digits in today's trading session, down for 8 straight trading sessions, and currently down 16% in this week, over 35% from its 52-week high as well. There are 3 reasons which are, plaguing the stock right now. The biggest one, of course, is that this decline has been caused by perhaps some fears around one of its largest institutional holdings, and there being, a churn at the top, Motilal Oswal, where Niket Shah has been internally reshuffled in the organization itself. Motilal Oswal has 9% stake in the company, which has actually increased from 6% same time last December to around now in December 2025 as well. If you look at the other funds as well, while Franklin continues to hold its stake, Sundaram has pared its stake, as has the government of Singapore. It's important because remember, the promoters own sub 63% stake in the company, just below that, but they have nearly 25% of their stake pledge. So with this big decline, will this pledge come up for a little more, or will there be further addition to that pledge or not? has a bit of a concern on the stock. The other factor that we're looking at, retail investors own nearly 6% of the company. This too is a number that has increased from 5% last year, and the number of retail shareholders have increased by 1 lakh. So all these factors make it extremely important for one to track Kalyan Jewellers and the trajectory from here, especially given the underperformance in the stock, despite the strong fundamental performance that we're seeing in the jewelry sector, thanks to gold and silver prices, along with the demand for jewelry, which is more affordable and accessible in nature as well. The third quarter updates for the entire pack, no real questions, but this technical factor has the stock really pressured.
Well, thank you so much, Mangalam, for joining us and highlighting and explaining all of the reasons why Kalyan Jewellers has been under pressure for so many continuous sessions. Well, Sudeep, coming across to you, wonder if you have a view as far as Kalyan is concerned. Clearly, factors beyond fundamentals actually impacting the stock currently. Do you feel it now presents a good value proposition, especially if you're looking at it for a medium or long term, or within the jewelry space, which is your top pick?
Well, within the jewelry space, I have been bullish on Titan for a very, very long time, and I continue to maintain my view from a long-term perspective. But I also do like Kalyan, and I have been mentioning about Kalyan for quite some time as well. And I believe this correction is definitely an opportunity for picking up. May not be, tomorrow itself morning, but just wait and watch and start picking up Kalyan. I think it's a great opportunity. There is absolutely no problem with the fundamentals. Their model of using franchisee for expansion into North India where the margins are higher, West Asia expansion, again through franchisee route where the margins are better, increasing the studded portion in the overall mix, again a margin accretive. So there is absolutely no problem. I think this is very correctly pointed out by Mangalam, technical issues which has been plaguing the stock, and that's why we have seen this sharp correction, but definitely a great opportunity considering what's happening in the gold and silver market.
That point, Sudeep. Shrikant, quickly, if you can tell us anything from the consumption space or the jewelry space that you like technically?
So yes, from the jewelry space, if we consider Kalyan Jewellers, then it has broken important level at 400. It was around these 400 levels in the month of March 2025. And after such a long period, when the stock has broken this level, one thing is very clear that the stock is heading lower, and we may even see the levels of maybe 333. 100 sort of levels in the near term. But if we consider other stocks like Muthoot Finance or Titan, there the relative outperformance is very, very high, and we are expecting furthermore upside from Titan as well as Muthoot Finance. So ideal strategy should be to look for adding them on every dip instead of adding at current levels in one go. So Titan, which is around 4,000 sort of levels, there we are of the view that the stock is going to consolidate some more time within the range of 4,000 and 4,200, but eventually the stock is heading for the levels of 4,500. That's my view.
Well, thank you so much, Shrikant, for your view. And with that, we thank you both, Sudeep as well as Shrikant, for joining us, giving us your view on the markets, fundamentals, as well as technical levels. Well, with that, it's time for a quick break. We'll get to the top corporate voices, along with the key market events to watch out for on the other side.
Welcome back. You're still tuned on to Markets Forward. Let's get in some corporate voices of the day. Persistent Systems Management said a one-time impact from the new labor code weighed on profits during the third quarter. The company expects to remain in the 16 to 17% EBIT margin range in the near future. The management also said that it is confident of achieving the goal of $2 billion in revenues by March 2027.
Supreme Industries Management has maintained its FY26 plastic volume growth guidance at 15 to 17% and overall volume growth guidance at 12 to 14%. However, the EBITDA margin guidance has been cut by 100 basis points to 13.5 to 14%. The company added that prices have begun rising slowly but steadily since January 2026.
Vikram Solar said this recent dip in EBITDA is temporary and expressed confidence in meeting its FY26 guidance. Speaking to CNBC-TV18, the management added that it is ready to expand overseas, including Europe and West Asia, and dismissed oversupply in solar modules as a business risk.
Amagi Media Lab saw a weak market debut. The shares listed at a 12% discount to its issue price. The company's management told CNBC-TV18 that it is targeting margins of 20 to 25% as it scales global business. Amagi stated that only 10% of its $17 billion addressable market has transformed so far, leaving substantial headroom for expansion.
And before we wrap, we bring you some key market events to watch out for. Gaurav Javalkar is standing by with the key events to focus for tomorrow's trading session. Gaurav.
Well, yes, for tomorrow, first is let's talk about earnings because we have got a couple of key companies who will come up with the earnings and the likes of Coforge, Adani Energy, Adani Total Gas, Emphasis, Science. Other than that, we also have got Premier Energies, Syngene International, and from the financial space, we have got Bandhan Bank, Bank of India, Home First Finance, Ujjivan Small Finance Bank, along with others. So definitely these are the key companies which will be on our radar. Other than that, let's also not forget about Interglobe Aviation. Now, tomorrow is the numbers, and at the same time, there is a PIL which was filed against Interglobe Aviation, and Delhi High Court is likely to address that PIL. So let's watch out if there is anything to read from that. Let's also not forget about the US market data from the global point of view. This is going to be an important data point in the likes of GDP growth rate, initial jobless claims, core PCE price index, and at the same time, let's also not forget about the takeaways from Mr. Trump. So Mr. Trump is going at Davos for the event. So the takeaways from his speech are likely to come, and these are going to be a key thing to watch out for, because from the global point of view, we have seen how volatility has played not only in the Indian market but overall in the global market. Let's also not forget about the Board of Peace Charter announcement. Now, that is also something that we will be closely tracking out. And from the European region, now there is going to be a meeting, emergency meetings technically, to discuss the issue over Greenland, and at the same time NATO is also going to have a meeting where Chief of Defense is going to meet and discuss the issues of Ukraine. So these are the key events, and definitely on the back of the macroeconomic events that have been happening and the markets which have been shaken because of that, let's watch out and see if there is anything to read from these events.
Thank you so much, Gaurav, for joining in with all those events. Let's go across to the next important news piece. Zomato's parent company, Eternal, has announced third quarter earnings in line with estimates. But of course, the big news is Dipinder Goyal stepping down as CEO, with Albinder Dhinsa set to take over. Goyal will become vice chairman and he will remain on board of directors as well. Okay, all right. With that, we'll do one thing. We'll take your leave on this edition of Markets Forward, but we'll be back with more news and updates on the other side.